afternoon and welcome to BizTech's Asian Midday Market Watch. It's Tuesday, the 18th of July, and we have Charu Chanana, market strategist from Saxo Markets, coming to us from Singapore. Charu, as always, good afternoon.
Good afternoon, Brian. Good to be back with you.
Now, good to see you, Charu. Now, before we get your insights on our special show focusing on opportunities in India, let's take a look and see how markets across the region have performed. We start with crypto markets. Bitcoin is at 30,111. It's down 0.62%. Ethereum is at 1,908. It's down 1.28%. Now, looking across the regional stock markets, we start close to home for you, Charu. The SGX Straits Times Index is down 0.17%. Bursa Malaysia is down 0.16%. Shanghai is down 0.32%. The ASX All Ordinaries is down 0.22%. The Nikkei 225 bucks the trend. That's up 0.18%. The Hang Seng is down sharply 2.18%, and rounding up the numbers, we've got the Kospi, which is down 0.45%. Pretty much a sea of red with one exception, the Nikkei. Tell us why, Charu.
So, of course, we had that China's economic data out yesterday. I think that's still sending some ripples through the markets, especially because the Hong Kong market was closed yesterday. So it's just catching up to that trend with that, 2% decline that you've just shown us. And the other markets also still cautious of the fact that, the Fed tightening is continuing, whereas the China economy is not showing good enough signs of coming back to life after that reopening that happened late last year.
Now, Charu, I want to start then by looking at India. Then I think what you've been seeing is increased funds flows to Indian ETFs, and obviously that's part of a bigger, longer term growth story of investors really shifting away, perhaps from China, towards more Indian centric investments.
Yeah, absolutely. I mean, this morning I saw this report as well on Bloomberg, kind of saying that for every $1 that's going into China markets now, there are $3 that are going into the Indian markets as well. So certainly a story that's catching up very quickly. We've seen that in the performance of the Indian indices as well this year. And as you mentioned, of course, it is a very broad macro story where demographics has been one of the key underlying themes for investors to consider. Rapid urbanizations, a growing middle class. So, of course, India is also becoming the fastest growing economy of the world because of those reasons. And that is one factor that investors have been attracted towards. But, you rightly said, it's also a little bit coming from what's really happening globally at this point. Two key trends there. One, of course, the geopolitical tensions where manufacturing supply chains are being rejigged, and a lot of companies are trying to find locations where they can set up their manufacturing houses when they're moving away from China. We've discussed Japan as one of the key beneficiaries of this trend earlier, but certainly the kind of scale that India can provide, the cheap labor force and a skilled labor force at that, it's an English speaking STEM graduate. And there's obviously a key competition there in the labor force and the quantity and the quality of the labor force that many countries can provide, and India stands to benefit both in terms of quantity and quality of labor that it provides. So it's been attracting a lot of manufacturing companies to shift bases to India. Apple obviously being one of the first movers there, and it will be a key test case. If Apple is successful, many other companies will also be motivated to kind of consider setting up their supply chains in India. And the second key factor for investors, particularly who had exposure to China for a long time, they've been generating an alpha in their portfolios with that exposure to China, are certainly not getting that now with that slowdown that we've seen in China economy and the Chinese markets as well. So investors are looking for other emerging market opportunities which can potentially generate the same alpha over your US based portfolios. And again, because of the fast growing GDP and the immense opportunities in India is able to provide that alpha opportunity to investors as well.
So then, Charu, which begs the question then, how do our listeners and our audience profit from this? What should we be looking at, and how should we be looking at to invest in India?
There are a lot of ways, I think, and some very simple ways of investing in India would be through a broad index exposure because it's a very broad macro story. Honestly, it's coming from demographics, it's coming from a push to manufacturing as well. While there is a global demand for these manufacturing supply chains being rejigged, the Modi government has also announced a PLI scheme, which is giving incentives to companies to come and set up manufacturing there. So consumption, manufacturing, services is obviously a key pillar of growth for India. So it's a very broad story, and a broad index exposure should be considered. I would say, but still, I mean, if there are listeners who want to kind of consider specific sectors, then again, going in line with the themes that we just discussed about consumption, then that brings a lot of consumer stocks, be it staples or also even discretionary, because there is a rising middle class and growing urbanization. So even discretionary consumer stocks are quite interesting. There's healthcare and there's financials, especially banks, where the penetration of banks in India is still underwhelming. So there's a lot of scope for improvement there. And if you talk about this growing manufacturing, then there's industries like energy storage, which is obviously a key focus, energy transition, which is a key focus, IT and electronics as well. And if you talk about the infrastructure push that will be needed to kind of adapt to this growing manufacturing push also, then cement companies and logistics companies can be very interesting in that aspect.
So, Charu, and you're echoing the sentiments of a lot of savvy investors that says that India is looking a lot like China in 1990. But let's balance this with looking at then what are potentially some of the risks that investors should be cognizant of when investing in India. Yes, there's a lot of positives, but what are the risks associated with
Yeah, I
it?
mean, investing in any emerging markets comes with its risks, and I always say that investing in India has its fair share of risks, and it's a game of patience. It's not going to be a quick return game because there can be a lot of ups and downs in the way. That can be a bumpy ride, especially with politics being a little bit so volatile. We have elections coming up next year, so that can create some ripples in terms of policy and in terms of just the political stability as such. We've seen corporate governance being a big issue, with the Adani crisis earlier this year, and that's again, it's a key highlight of the Indian markets, Indian corporates, that it is a known feature that corporate governance and corruption risks are very high in India, and that's why again index exposure kind of makes most sense because it gives you a better diversified exposure. So you kind of you have a better risk reward in that sense. But of course, I think these are things that an investor really has to keep in mind when selecting their picks in the Indian market.
On that note, Charu, thank you very much for your insights. Thanks for coming on the show.
It was a pleasure, Brian. Thank you for having me.
Now, I'm Brian Fernandez, and we've been speaking to Charu Chanana, market strategist from Saxo Markets, based in Singapore, on BizTech's Asian Midday Market Watch. This show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.